Hello boys, this is the last video that I'm going to make and it's about 10.24 in your textbook. Once again, I'm just going to focus on the adjustments and I'm going to explain them via T accounts. You know that your setup should be to copy and paste everything on the pre-adjustment trial balance to the post-adjustment trial balance, the names of accounts and the amounts. After that, do the adjustments and then at the end, you just wrap things up and you transfer pre-adjustment plus or minus adjustment to the post-adjustment columns. Okay, remember it's very important that you know who we are. We are Intro Supplies. This is our trial balance for 30 June 2003, which automatically tells you that our year ends in June and started the 1st of July 2002. And the whole point of adjustments is we want to have whatever happened in this year on our statement, and whatever didn't happen in this year and will happen in the next financial year, we want to take it out. Okay, let's jump straight into the adjustments. This is quite a long exercise. It has a few nice revision adjustments of GJ, but it also has one or two transactions that, in my opinion, is a bit tricky for Thursday's test. Okay, I'm going to do it with you, but I will tell you if it's a little bit advanced for Thursday and if you do not have to stress too much about it. The first one is one of those. So it says part of the premises have been let to a tenant since the 1st of October 2002. Okay, immediately you need to realize that we haven't let the building for the full financial year. Our year started in July. We only started renting the building in October 2002. Okay, so only for this piece of the year, which if you go and count, I recommend you use your fingers, will be October, November, December, January, February, March, April, May, and June. Okay, so from October to June is 9 months. But let's go and read. The rent for June has not yet been received. In other words, we haven't received 9 months. We only received 8 months of rent because the tenant only paid us up until the end of May. Okay, there's 1 month then left. The problem here is that we have earned the rent. He rented the building, so we have to add that extra 1 month in. It will be accrued income for us. Okay, then they say, note, the tenant undertook repairs to the buildings. This cost 2,500 Rand. Repairs are the responsibility of Intro Supplies, which is us, and therefore the amount must be offset versus the amount owing. Okay, so first of all, too difficult for Thursday. Secondly, let's deal with rent income first. We have to record that extra month of rent. Okay, so we have to add 1 month in. They didn't give us the value, but they gave us the pre-adjustment trial balance. You will see at the bottom here, rent income is a total of 24,000 Rand. This represents 8 months of rent. We established that with our timeline. So to get the rent per month, you divide that by 8, which gives us 3,000 Rand of rent per month. We want to make this value bigger because it still needs to include the rent for the last month. To do that, we have to go and credit rent income. With 3,000 Rand. Make it more. Okay. With the repairs, our debit is split a little bit. Okay. One of the accounts will be accrued income because the tenant owes us the money. However, the tenant undertook some repairs, which we should have paid for, but he paid for. In other words, he is not going to pay us the full 3,000 Rand. He is going to pay us 3,000 Rand minus the 2,500 Rand that he paid for the repairs. He will only pay us the difference, okay? Because instead of him paying us 3,000 and us paying him 2,500 Rand back. So the value that we still need to receive from him is only 500 Rand. And the other 2,500 Rand, the other debit part that links to this big credit, is an expense for our business called repairs. This is too tricky. We won't ask you to split a credit into two debits at this point in time. You need to know how to do it later on. But if this transaction is a bit complicated for you, then don't stress. Next up, they say bank charges of 350 Rand were incorrectly charged to the interest on overdraft account. Error must be corrected. Errors in adjustments is super easy. You just minus it from the account where you don't want it and you add it to the account where you... Okay, so in this case, you want to take it out of interest on overdraft, which is an expense, 350 Rand. It shouldn't be there, and you want to put it in to bank charges, which is also an expense, 350. Okay, credits and a... Next adjustment, number 3, says a debtor had been declared insolvent. Okay, bad debts. Immediately your mind should flash, bad debts. He owed 1,900 Rand. Okay, so we want to decrease debtors control with 1,900 Rand. We want to take him out. However, his estate paid 12 cents in the Rand. Okay, the amount was received but not recorded. So we need to go and record the fact that we received some money from him. The rest must be written off. Okay, so we want to take the debtor completely out of debtors control. However, not everything will be written off as a bad debt. He paid 12 cents. 12 cents is 12%. Remember that from term 2. Okay, the other 88% must be written off. Okay, let's deal with the 12% first. I'm going to call it 3A and 3B. 3A will be the 12% that we actually received. 3B will be the 88% that we didn't receive. The amount that we actually received would have affected debtors control, an asset. We minus debtors control because we received some money from a debtor. If you do the calculation, 12% of 1,900 Rand is 228 Rand. Take it out of debtors control because we received money. If we receive money, we put it in our bank. Okay, be careful. I wrote asset, but I hope you noticed in your pre-adjustment trial balance that bank has a credit value. In other words, bank is in overdraft. So bank is a liability for this whole exercise. Okay, it doesn't affect the side of bank that will be that we will work on in this transaction. It does, however, affect if it's a plus or a minus. Okay, so look here. Because bank is the liability, the plus is on the credit side. When we receive money, it's always a debit in bank. But now, instead of making our bank bigger, because bank is an overdraft, it actually makes our liability smaller because we owe the bank money, and the moment when money gets deposited into our account, they immediately take it for themselves and we owe them a little bit less. Okay, so be careful. On your post adjustment, you would have had to minus this value from bank because bank is a liability. Okay, Then the part that we need to write off, the other 88%, will also go to the credit side of debtors control. We are writing this debtor off. We will never receive the money from him. Okay, so it's 1,672. How did I get that? I said 1,900 times 88%. If we write a debtor off, it goes to an expense account called bad debts. On the debit side, we always debit expenses. Okay, so can you see, if you add these two together, debtors control ultimately decreased with the full 1,900 Rand, but the debit is split between how much we received and how much we have to write off. Adjustment number 4 says no entry was made. In other words, we have to make the entry for a check received from a debtor whose account was previously written off. Okay, another transaction that we dealt with in term 2. If a debtor comes back, somebody that we wrote off previously, then and pays us the money, then the account that is associated with this transaction is bad debts recovered. But the important thing to remember is that this does not affect debtors control. Because long ago, when we wrote the debtor off, we took him or her out of debtors control. So in our books, this person is not a debtor anymore. Okay, so debtors control is not affected. The are bad debts recovered, which is an income account because we are scoring. We thought we will never get the money. Now we get it. 150 Rand. And bank. Why? Because we received a check from this person. Just remember that bank is now a liability. However, whenever we receive money, it's on the debit side of bank. The bank will immediately just absorb that money from our accounts and we will owe them less. Okay, so remember, if bank is a liability, the debit side is a minus. Okay, very, very, very important that you do not record this in debtors. Next up, it says another debtor's account was 6 months overdue. He owed 2,000 Rand. He is to be charged interest on his overdue account at 15% per annum. Okay, so what do? We create an income account called interest on overdue debtors, and we credit that account, and then we make debtors control more. Another good GJ transaction. Okay, so interest on overdue debtors is an income account because we will earn the extra amount, and debtors control is an asset. To do the calculation, we do it as we always deal with any interest calculations. You take the value that he owes us, multiplied by the interest rate of 15%, multiplied by the time of 6 months. And this also gives us 150 Rand. Okay. It will go to the credit side of the income account and to the debit side of debtors control. He owes us more. Number 6 says the advertising amount includes the cost of a newspaper advertisement for 560, which would only be published in July. Okay, so important. Our year ends on 30 June. The advert will only be published after the financial year end. But they say the value in advertising, if you look at advertising, this value has that 560 in it. So what do we want to do? Because it's for next year, we want to take it out. We want to minus on advertising. Therefore, the two accounts are advertising, which is an expense, and prepaid expenses, Why? Because we have already paid for something that will only happen next year. This is an asset because it puts us in a good position when next year starts. We don't have to pay for it next year. Okay, advertising, we want to make it smaller. Why? Because we want to take it out of this financial year. That's the credit. And our asset is the debit because we usually debit. Then adjustment number 7. This is one of those that are a bit tricky for what we want you to be able to do at the moment, but I'm going to go through it. It says, during June, trading stock costing 6,700 Rand was stolen from the premises. A claim was lodged with the insurance company. The insurance company agreed to cover 80% of the loss. The check is expected next year, okay? July 2003 is next year. Okay, so stock got stolen, but not everything is a loss for the business because we've got insurance, we are covered. 80% we will get a payout for. The extra 20% will decrease our profits. Let's deal with the obvious account first, stock. If you look at stock, our stock got stolen. So we have to minus stock. And the amount of stock that was stolen was 6,700 Rand. One credit. However, we are going to split the debits because we know we are getting an insurance payout and we know that we have to write something off. So 80% will be received from the insurance, 20% must be written off as a loss. The insurance amount that we get does not affect the expense called insurance, okay? Because now it's not an expense for us. Our expense is the premium that we pay every month. However, when the insurance promises to pay us, but they will only pay us next year for something that happened this year. What does that sound like? Accrued income. I'm going to repeat that. The insurance company promised to pay us money next year for something that happened this year. Okay, so we will get the accrued income next year. It's an asset for us because we know we are going to get that money. 80% of 6,700 is 5,360. The rest, the other 1,340, that debit goes to a new account that we call loss due to theft. It's an expense for us because it will decrease our profit. We need to cut our losses. So can you see, one big credit split into two debits? Not too important for now, but you need to be able to do it in any case before the end of the year.